So I am starting this off once again. I am not a financial advisor. This is just for education purposes and also to journal my trades as well. I want to be able to look back at what I've done correctly, what I've done wrong, and learn from it. I have been trading for about 4 to 5 years, have had success, have had downfalls, have blew up accounts, have scaled accounts, and I'm at a point now where I've learned the strat. Now I'm about a year into it, a year and a couple of months into it. Took Kia Keely's advanced trading course in September. That's helping me become a better trader with some new strategies that I learned from him. But also, it's mostly to get my emotional state in check. I have been paper trading just for full transparency. I know there's been traders on Twitter that have gotten outed as they were projecting or showing that they were successful traders, but they were actually paper trading and using those screenshots as a way to get people onto their monthly subscription services and their call outs and things like that. But I am not doing that. Full transparency, I am paper trading. So let me go ahead and start with a few things that I have under my thesis for the week on the market this week. I know that SPY is trading at an all-time high, so I am keeping an eye on that. I am keeping that at in check at bay for myself, and I mostly trade tech. So tech stocks is kind of where I like to play. Mostly Apple, Amazon, Meta, Google, and AMD. I don't. I sometimes I'll trade Starbucks. Usually the stocks or the tickers that I know and shop with is what I like to trade. Um, and the goal for me this quarter is literally just a paper trade, just keep my emotion in check, and then I probably will put some live money into my brokerage account once again to start trading live. So in my previous video, if you haven't watched that, I'll put a link at the bottom to the first video. But I essentially had my thesis for taking Apple short. It went down on the month, it went down on the quarter, it's down on the year. Everything full time frame continuity was pointing down. So I did get in here foolishly. I did not, my actionable signal was this 212, and it did have a massive gap, which it did cover. So I should have waited for either a confirmation of it covering the gap or filling that gap and coming back down. But I got in a little bit early. I did have about a month of expiration, so I had some time on my hands, and it did come up. So I was tracking that to come up. And in the previous video, I did say how, even if it was paper trading, I wasn't live trading. I was still nervous. I still saw it go up. I was in about negative 200 in that paper trade, but I held on because I knew that this parallel channel was still in play. I have the key level here, which if you want the key level, I do have a link to it down at the bottom. I also have the range rush reversal from Kia Keely. I am affiliated with that, so I do get a small portion, but it doesn't take anything away from you. It takes a small portion away from Key to fulfill that, but nonetheless, you get the same great indicator here, and that's mostly what I'm using: the Strat Assistant, Key Level, Range Rush Reversal, and then this swing high and swing low. So I did see that it was coming up, and of course, you saw how it just dropped here. So it was around here that I started to hold on to it, and it kind of came back up, and then I got out about down here. So that was around a $400 gain from two contracts that I had. And of course, there were paper trades. And then my thesis was I trade on the 2 hour. So my thesis was, now that it hit the bottom of that parallel channel, I was going to take it on the 2 up. And then you could see here that it did start to come up, and I was going to have my stop loss here at this pivot low. Well, if I did take that, which I wish I would have, it never came down to that. I know this three would have scared a lot of people. It would have scared me if I was in that, whether it was a live or a paper trade, and I would have started getting nervous. I would have thought about getting out, but I want to stick to the game plan of having my stop loss there and only getting out when it hits that. So you can see that it didn't, and it continued to go up. I could have added to this 312 here for it to go up, and I thought it was going to cover this gap, and it hit this parallel channel. Now it will cover this gap eventually. I just don't know when, but it might not be tomorrow. So we'll see. I did, however, take this two down here on this actionable signal of this shooting star down here. On this candle, when it hit the two down, I did take it, and I have, especially since it went down on the day, it was down on the week, so I had that as my time frame continuity. It looks like it's up on the 4 hour, but I'm okay with that. So I have a month expiration of this, and I am taking it down to about either the bottom of this parallel channel or the bottom of this broadening formation if it does indeed stay. So my stop loss on this is definitely the top of this candle right here at 227. Now I might have it a lot tighter. I know I have the day and the week. If it does go above the week, I think I will take it out. I'll get out of it, and that will be my stop loss. Is if it goes above the week again tomorrow or Mondays, but we'll see. So I do have that, but it looks like my trade here would have come to play, and once I saw that this hit that parallel channel, I would have gone down into the 1 hour, and then once I saw that it hit a 212 down, especially taking the day down, that's actually when I would have gotten out and taken profit. So that play would have hit, and that would have been a winning trade. The other one that I'm in right now is AMD. AMD is in a downtrend as well, and you can see with Key's cloud here within his indicator that it is in a bullish trend. You could see that it did climb back up here from the parallel channel halfway up, but I do have time frame continuity on my side when I did take this trade. Actually, no. So I took this trade early. So this has been one of my downfalls is I get into a trade way too early, but I got in here. Actually, let me show you on the 2 hour. So I get into trades early, but with this one, hit the top. I got in on this two down just right here. And then, of course, today opened and it gapped down. Now, when this hit here, I was probably about 160 in profit. I could have gotten out of that paper trade, but I decided to just stick into it. And you could see that it did go the other way. It did go against me. And now we're above the day, above the week, above the month, and above the year. So I am regretting staying into that, but I'm hoping that because it is down on the, let's see, on the quarter, it's actually up on the quarter. So see, that's the weird thing with the indicators, that now it's showing that it's down on the quarter. It is up on the week, but it's showing kind of that week to up. But you'll see it's down on the month. So it's down on the month right there, down on the quarter. So I'm anticipating my thesis for it to stay in that parallel channel and for it to continue to go down. And my profit target is either this pivot low here or for it to continue to go down the bottom of the parallel channel. So if you want to learn how to do this, I started the year with 250 as a hypothetical paper trading account, and now I'm at plus six. I'd say about 650 if this Apple and this AMD trade pans out. Hoping to get to about 1,000, so that would be about plus 750 or so into the account. And that's usually where I'm pretty good at, is when I start to get higher in my brokerage account is when I start to get into trouble. When I have a higher portfolio, when I'm around the 5, 6, 7,000, close to $10,000 mark, I start to go heavy with contracts, get in early, and then that's when I fall. So my goal this week, this month, this quarter is to really just stick to my plan, get in when I see an actionable signal, not get in too early, not get out too early. So there's times where I will start to freak out and I'll get out too early. So that's where that emotion plays in, and just having that stop loss. So, for AMD tomorrow, if it continues to go up above this parallel channel, and I'll have my stop loss around the 125 mark. I do have a month of expiration on this as well. So that's what I'll continue to do. And those are my 2 trades for the week. So my thesis on Apple was correct, that it was going to go up and possibly fill in the gap. And it still might, but we'll see. It hit the top of this parallel channel, it's going back down. And then now with AMD, same thing. It's hitting this top of this parallel channel. It came down here. It did fill the gap, but I'm anticipating my thesis for it to go back down. I do want it to go below the week, the month, and the year here, along with the low of yesterday or the low of today, and for it to fill this gap here, and go to the bottom of this parallel channel, or bottom to this broadening formation. So once again, this is just showing you for education purpose and to journal my trade, but as well to really show busy parents and anyone looking to get into the side hustle of options trading on what you can expect, the strategy that I use, the indicators that I use, the time frame that I use. My favorite's the 2 hour is my way to get in now. And if you want to learn any of this, I do have links down at the bottom to Kia Keely's indicators, but also his book below. I am affiliated with it. I do get a small portion of it. It's not going to take anything out of you. It will take the small portion out of Key, but nonetheless, you'll get great products. You'll get a great course with the book, and any indicators that you use will benefit you in a great way. So definitely hit the subscribe button below, hit the like, and subscribe to our newsletter, busyparent.com. That way you can see the other side hustles that I have available to you if you are a busy parent and you're looking to make a side hustle for 2025. All right. Thanks, guys.